Hey guys, welcome back to the Black Accountant. Today I wanted to talk a little bit about what a deduction is versus a credit. A lot of people, when they come to do their taxes, get confused between a standard deduction, an itemized deduction, and the child tax credit and various other credits and don't understand the actual difference between the two. So, what a deduction is, typically speaking, is it would either be a standard deduction or an itemized deduction. And what that does is it decreases the amount of your income that is subject to tax. So, in an example, what we're going to do is let's say we had gross income of $50,000. So, let's say Bob worked at a hair salon and he got paid $50,000 this year total before taxes. All right. So what a deduction does is it's going to decrease this 50,000 by either a set amount or by an itemized amount, whichever is typically higher. But for the purpose of just illustrating this example, we're going to use a standard deduction. So let's assume that Bob is a single male. And that means that his filing status would most likely be single. And this, the standard deduction for a single man or a single person in general is $12,400 for the year 2020. So out of this 50,000, we are going to deduct 12,400 and get to a new amount. I'm going to need to use a calculator because I can't do this math in my head that quickly anymore. Must be getting a little bit old. So we'll do 50,000 minus 12,400, which means Bob is going to have income subject to tax of 37,600. So what that means is that the IRS, instead of assessing tax on this number here, this 50,000, they're going to assess his tax based off of this number, this 37,600. So it's a dollar for dollar reduction in your gross income to get to an adjusted gross income, which would be this number. And then a credit, for example. So let's say, just for purposes of this example, we have this 37,600 and the IRS assumes a 34% tax credit, or a 34% tax rate for Bob. So we're going to take 37,600 and multiply that by 30%, and we're going to get $11,280 assessed of tax. So Bob has a tax amount that is going to be due of $11,280. This is assuming a 30% tax rate. Okay. So I hope you follow along right now. If you have any questions, feel free to leave them in the comments below and I'll try to address them as best as possible. All right. So this is the amount of tax that Bob owes. But let's say Bob went to school in 2020 and he got a 1098-T form. So in case you didn't know, that's the form you would receive if you were paying tuition, or usually typically at an accredited school or university, you would be privy to that tax form at the end of the year, where it would show how much scholarships you earned or were given and how many grants and how much was out of pocket for you. And typically speaking, if you have more payments that you made towards the school than grants, then the difference is usually going to be whatever credit that you qualify for. So let's just assume the maximum tax credit for education, which would be $4,000. So I would subtract that $4,000 from the $11,280, and that would leave me with $7,280 of tax that I would need to pay. So in this case, the $12,400 is a deduction because it reduced our income and just gave us the amount of income that can be taxed. And the credit decreased our actual tax that we were assessed. So that would be the $4,000 here in this example would be a credit. Thanks again for watching, and I hope to continue the series.